My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content.
All right, guys, welcome to Property Profits Podcast. I'm your host, Bryce Kaminsky, filling in for Dave Dubois. And have you ever thought about making a bold leap from Canadian real estate challenges to diving into the dynamic world of U.S. investments? Today, I have Allen Vansen on the show today, a dual citizen breaking barriers and unlocking doors in the pursuit of financial freedom. Allen, welcome to the show. Fantastic to have you here.
Thanks so much, Bryce. Enjoying today's conversation.
Yeah, it's going to be a good one. Now, the main question, I'm sure you get this all the time, is which do you prefer, Canadian or American real estate, if you had to pick?
I will say it's changed in the last year. Right now it's very strongly favored towards the U.S. Real estate. Just more of the opportunities and the larger markets that are a little more landlord friendly.
Yeah, definitely. Because I saw in the show notes that you primarily invest in Ontario when you're in Canada. Is that correct?
That's correct. We've been in Ontario, have a multifamily in Guelph, which we love the supply-demand quotient, but the regulatory market is just too challenging, particularly when I look at using investor capital to provide a return. Just too many things outside of our control.
Yeah, specifically with Ontario, you're saying.
Absolutely. Yeah.
Yeah, definitely. When you look at the opportunities in the United States, it's like 40 million people, 400 million people. That's obviously an oversimplification, but when you look at it, there's 10 times the people, 10 times the opportunity. It just seems like that would make sense. But what was so enticing in the Canadian section that you started here? Why not just American investments all the way through?
Yeah, for sure. I mean, I did a bit of I've been involved in real estate for a long time and kind of jumped in and out. And in the last couple of years, kind of got reinvigorated by the opportunity in real estate, and particularly around commercial real estate, multifamily specifically. And so really started looking at opportunities in my backyard, which I was based in Toronto at the time. I love Guelph in terms of its proximity to Toronto, Kitchener-Waterloo, Cambridge area. Rents are a little bit higher, all those nice things. But as I've kind of delved into that market, and we picked up a 6-unit that had some real opportunity to grow and double the value of the asset, we really started running into kind of all the headaches that many Ontario-based landlords face in terms of those regulatory pieces, how long it takes to get a tenant out, even with a building that, is original 1950s build, and you want to upgrade the unit. Well, the tenant doesn't want to leave because they're paying, incredibly low rents. And it took, almost a year to get that tenant moved out. So, it's challenges like that just put too much investment at risk.
Yeah, and it seems like, even here in Manitoba, we have a very strong regulatory board, but they're more, I would say, more pro landlord. But even then, we had a decision on a unit where it was just like they can stay, no explanation. And I think those challenges kind of go both ways, but certainly Ontario, we've heard some, I guess we could call them horror stories. We've heard some horror stories out of Ontario about what landlords are having to deal with. So then in the last year, you've been then pivoting to American assets, American real estate. Now, explain the dual citizenship portion. How did that come apart or come about?
Yeah, no doubt. A classic story with my mom and dad. My dad was in the U.S. Navy. My mom was going to nursing school in St. John's, Newfoundland. And they met, and then I was born in North Carolina when after they got married, and my dad was finishing his university. So was born in Raleigh, North Carolina. My dad's family is all from down the south in and around Georgia, North Carolina, Arkansas. So growing up as a kid, we always went down to visit family and spent a lot of time down there. I lived down there in the early 90s, I guess, a couple stints of living down in the States, but always found myself coming back home to Canada, in particular the west coast of Newfoundland, of all places, which is where I'm based today. But really, as I was looking at the opportunity around the US market, being a dual citizen, it's just a little bit more, I won't say favorable, but getting access to credit, building your credit, dealing with lenders, a little bit easier being a US citizen when you're down having those conversations.
Mm-hmm. Because there's certainly some hoops you have to jump through if you're a Canadian that wants to invest down there. Now, it's not out of reach. It's just a matter of doing this stuff. But I think the familiarity with the market and the people and the mindset is really important when you decide I'm going to invest in the United States. So, where in the United States are you investing, or at least looking at?
Yeah, for sure. I agree with you 100%. Having that familiarity, having family down there is a nice added bonus. And it's nice to have another reason to head down outside of just going to visit your asset or look at some opportunities. But
Mm-hmm.
we're really leaning into certainly Texas as a market in and around Dallas, Fort Worth, San Antonio, two markets, two MSAs that we really like. In and around Atlanta, Georgia is an emerging. It's been a strong market. It's got continued strong population growth. Same thing with North Carolina, and in fact, Tennessee is a market that we really like. So we're really looking at some of those markets and specific areas. And that's one of the neat things I found as I've really have dove into the U.S. market is the amount of analytics and the amount of data you can get down to the area code, the zip code, in terms of what your neighborhood is like, and it matters because from one side of the street to another, you can be in a whole different world when you're dealing with tenants and what profile you're looking at.
And that's one thing that I really emphasize a lot when we talk about American and Canadian real estate is it is block by block. This block could be perfectly fine and a very good investment. And then you literally go around the corner and down to the same mid block location, one street to the west or whatever, for example. And it's just like you do not want to be on that street. I think it has something to do with the lack of back lanes. It's not really a thing. A lot of times it's like properties backing on each other. And I don't know what it is. I think it's maybe interstates, or I haven't figured out what it is, but you're right. It's block to block. And I do like the data. You can really dig down, and middle of the night, 2 o'clock in the morning, you don't have to wait for the offices to open. You can go on the county's website and really just start digging deep data dives on what it is that you're looking for. So what does the portfolio look like, or what does the expansion of your portfolio look like in the United States as you've been entertaining the idea?
Yeah, so we've got a sixplex in Guelph, as I mentioned, and that was really our first kind of proof of concept for ourselves, and we really believed in the whole philosophy of let's go and do it first before we go and try and raise capital. So,
Mm-hmm.
obviously shared that experience with a lot of friends and associates who certainly endorsed that as a. I'm glad you're doing that. I'm glad you're learning lessons on your own dime, if you will. So we have that asset, in fact, that we're still working through getting fully turned and repositioned. But we're invested as limited partners in a 108 unit property down in South Carolina in Charleston, which was just a really sweet deal. We're looking at some opportunities right now about investing as a limited partner again in a San Antonio asset.
Mm-hmm.
And through a network I joined in the US, I've been approached a number of times around coming on board as a GP in a syndication and focused on trying to raise some of the capital, do a little bit of the due diligence, the asset management, which is a little bit more where my background lies in terms of those strengths. So looking at that first real big property from a GP perspective that we're going to be getting into in 2024.
Yeah. I mean, there's lots of, it seems like there's just more apartments down there too. Like Canada didn't really do that. It seems like we continue to expand outward instead of getting vertical with our residential, at least. So what does this year look like? If you're making a plan, you say, this year I want to do, how much stuff are you trying to pull off this year?
Yeah, we'd like to really delve into, our focus is on value add assets, a solid Class B. We think there's a lot of growth in those markets, continued population growth, continued demand, even
Mm-hmm.
with some newer product coming on the market. Just given where the market is, we're seeing a lot of distressed owners right now starting to hit that tipping point of needing, the value of their asset has dropped down to pretty much what, their deposit or their what they financed it for.
Mm-hmm.
So we're seeing we're kind of buying at the bottom of the trough right now. We're getting to be the bottom of the trough, and I'm never a fan of trying to time a market, but we're fortunate in terms of our timing, I think, as we move into this. So the goal is to really target those assets that are in that 75 to 150 units. And we'd like to, at the end of the year, I'd love to be looking back and saying that, we built a portfolio as GPs or sponsors on products or investments, to have 400 or 500 assets or 400 or 500 units in our portfolio by the end of the year.
So right now, what are you doing to fund these sort of deals? Like, how did you fund the last one? Is it your money? Is it other people's money? What does that look like?
Yeah, so our asset that we bought in Guelph was with our own capital, and again, as I said, that was really around kind of proof of concept to not only ourselves but to potential investors in the future. We
Mm-hmm.
do have some private lending that we've done in and around some other assets that we've purchased in Canada. But the intent moving forward is to follow that syndication model with these bigger assets
Mm-hmm.
and really lean on that initially that network that I have from business relationships, but also then to partner with a number of members of a GP team through a network that I'm in the U.S. and really expand that. So syndication approach where we bring in those limited partners and that's the plan is to kind of really focus on that and raise capital through a syndication model.
So what are you doing right now to raise money for these these limited partnerships? What's the way as far as like existing connections or getting new, expanding your list? What does that look like for you these days?
Yeah, so currently it's really been around my own kind of relationships that I've built through my career over the last 30 years,
Mm.
and a lot of friends who, as I talk with those individuals, sharing what we're doing, sharing kind of our experience and why we decided to shift back into real estate, and in particular why the larger multifamily asset class in those key markets in the U.S., why they're advantageous, why it's a good time. So really talking with a lot of those contacts that we already have. It's been, in many cases, it's actually been friends and business associates that we haven't necessarily been in touch with in the last 4 or 5 years. But once we share a little bit of what our journey is and what we're looking to achieve, get a lot of friends and again associates reaching out going, that's really interesting, I've always wanted to, or I'm not really happy with what my investments in mutual funds or the stock market have done, and I'm looking for something that's a little bit more along the lines of what you're talking about. And so love to have that kind of conversation around where can I invest, where can I partner. But a lot of it, pretty much all of it, is really based on that relationship that they have with me so far, and as it will be with that general partner team. That's the most important part when you're raising capital, is that element of trust and that
Mhm.
relationship. It becomes less about what the asset is and much more about what you're doing as the sponsor or the general partner in terms of how you're going to manage that and the relationship you have with your investors.
Yeah, like what do you, how what's your value in the whole thing, right? Instead of
100%.
instead of the deals come and go, but who's managing this thing? Who's driving?
Yep.
So, um, you were going over, the different ways you're raising capital for these things, and the thought was, um, what is it like? Are you still in a T4 job and here in Canada out on the East Coast? And is that where primarily you're having those conversations with professionals to get access to their capital? Is that what I'm understanding?
Right. No, so I am doing a small project right now on the East Coast, but it's about a 6 month contract. I'm about a third of the way through that. That's just more a little bit kind of time on my hands more than anything.
Mm-hmm.
But the conversations are really with, or the conversations with potential investors are really with associates who I've worked with in the past through my sport and entertainment career,
Mm.
friends from my contacts here in Newfoundland and in Toronto, where we lived for the last 13 years. So it's really going through that database of, who do you know? And then, I found LinkedIn actually to be a really interesting and good prospect area. There's a lot of those business contacts you've connected with on LinkedIn. I know a lot of the real estate communities are based and a lot of things happen in Facebook. It's a good way to connect with a lot of those older friends that you might have had.
Mm-hmm.
But a lot of those business contacts seem to have come through LinkedIn. And it's a really good environment to, again, share your message in terms of what you're doing from a business perspective. And I don't know if it's a mindset when people log into their LinkedIn profile, they're thinking about things a little bit more from a business side as opposed to looking at pictures and seeing where someone's been vacationing or what they've been doing lately, like you get on some of the other social media.
Yeah, LinkedIn certainly is I would say more serious. People are more serious on it. And I think the other thing too is like right in your profile, it's like CFO, COO, like it's meant to be like a business card. And what's interesting is it's kind of blended, in my opinion, where Facebook has a little bit of like it's like media heavy and LinkedIn is like not very media heavy, but there is opportunities like posting articles. It's very much more I guess intellectual. There's no like endless doom scrolling in LinkedIn. You're not just like scrolling and scrolling. You're on there messaging, getting messages, reading articles. It's a little bit more like a newspaper. And I do always say, when you're looking for capital, LinkedIn probably is one of the best resources because um you're probably not setting up a LinkedIn profile if you're not like a professional on some level. People don't just have a you don't see kids jumping on LinkedIn being like, I'm 16 now, I'm setting up my LinkedIn profile. No, it's
Yep,
not a thing. So
exactly.
how do you do that approach? What's been working as far as opening conversations with these two different groups?
Yeah, so a big part of it, and I think you're absolutely right. LinkedIn is a bit like that virtual business card because people are immediately seeing what your background is, and they see kind of what you're doing and what you've done before, and that's
Mhm.
where a lot of that trust certainly comes from, is your ability as a leader, as someone who's looking to leverage those investments. You can solve problems. You can be trusted with that capital, to preserve it, and then obviously provide a return on it. So a big part of that is really just openly sharing what you're doing, and I'll certainly share. That can be a little daunting. It certainly was for me when I decided to put out on my own LinkedIn profile, on my own social media, that I'm transitioned now as being a real estate investor, and that comes with cool. What does that mean? Or tell me more. And people see your history. People certainly who know you, they know a little bit obviously about your professional background, and
Mhm.
for some people they see that as a big pivot. And for others who look back far enough, they can see that I've been involved in the real estate industry in the past. So it's often just putting yourself out there, and it comes with, in my experience, it comes with a lot of interest,
Mhm.
from associates, and it comes with a lot of new connections, people that you may not have met before, but people who you get that on LinkedIn. You always see that first, second, or third
Mhm.
connection, and I've made a lot of new connections just by putting that out there and being connected with other people in the real estate industry, which you see a lot of people partnering together to take down some of these larger assets as
Yeah.
well, which I'm looking forward to doing.
Yeah, you definitely have to bring a few together to like knock those door counts down in 1 year. Like if you really want to get and become part of 150 doors, probably, I mean, there are places in the United States where one person could take down something that big with maybe a line of credit against a Toronto property because just the discrepancy, not the discrepancy, but just the price per door in some markets can be pretty low where you
Yep.
might actually be able to get a piece of that without having to bring partners on. But typically, you know, you don't want to put all your eggs in one basket, so you split it up and have a couple of people in there. But when you're doing all this stuff on LinkedIn and Facebook, you know, for people to bring that kind of money, that significant capital, they typically are on that like, no, trust framework. So try to let people know who are just getting started in the capital game or using LinkedIn or Facebook to do that. What are some ways that you found to really build those categories of people liking you, trusting you, and getting to know you?
Yeah, for sure. So, I mean, a lot of it is kind of your approach, putting yourself out there, engaging with that individual, you know, having an open conversation, and not. I think for a lot of people, and this is not just a real estate thing. I think it's you know, true in any aspect of any sales, is you're not really selling a product. You're, in particularly in real estate, you're providing an opportunity.
Yeah.
And in many cases, it's multiple conversations, and it starts with informing and, if you will, educating in terms of how does this work, you know, and bringing to life, you know, examples where, you know, you talk to someone about, I'm sure there's an apartment building in your neighborhood. You know, have you noticed it? Have you ever wondered who owns it? You might think it's a, you know, a big corporation. Well, it probably is, you know, a few people who've partnered together and pooled their capital and bought that asset, you know, 2 years ago, 5 years ago, 10 years ago. And here's how they manage it. And here's what goes into that. And here's what, you know, some of their typical returns are. You know, and so having a 2 or 3 page or 2 or 3 slide deck, you know, here's an example of an asset. If you're interested in something like this with these kind of returns, you know, a 15 to 20% annualized return, you know, a 2 times equity multiple, you know, a 15 to 20% cash on cash. Like, are those things that, or a IRR and a 8 to 10% cash on cash, are those kind of returns that you're interested in? And kind of lead a little bit of those questions, as opposed to, hey, I've got this amazing opportunity, but I need you to invest right now. You know, it's going to go away. I'm really trying to, you know, that method doesn't always work. But there's,
you're like scrambling.
Yeah, you need to kind of have that informing and educating as a core element of how you build that like, know, and trust quotient, as you just referenced.
Yeah, definitely, especially in the multifamily space. Like, it's a long game. These investors want to invest for a long period. It's typically not 6 months. I can't imagine, unless it's a bridge loan. That's you know, it's long-term investments, long-term vision, and to some degree, I suppose it takes a little bit longer to get people in on the idea. I think everybody understands, if I buy a bunch of apartments, then I'm going to get a bunch of rent. But the deeper details of like how much and how and this and that really does come with the education and making sure people can see that you're the guy who's got that information. So on that note, if people want to get said information, they want to find out more, they want to connect with you on LinkedIn and Facebook, those sorts of places, what should they do? How do they find you?
Yeah, for sure. All my profiles are real simple. They're all Allen Vansen or at Allen Vansen. I'm launching a new website called Vansen Capital Partners. That'll be live in a few days. So anybody wants to reach out, connect, they can reach me on any of those social media platforms or through our website. Love to have a conversation and see what opportunities we can present for them.
Awesome. Awesome. Yeah, definitely. Being a dual citizen, you've got more than one set of opportunities. You'll have lots of opportunities to get people invested in real estate, which is great. You know, delivering. I like what you said earlier too. Is the opportunities. We're getting people into opportunities that they wouldn't necessarily be aware of. So we're not so much trying to sell them anything as let them know, hey, I'm going. Are you interested in going too? Well, let's go together and see if we can make some money out here. So I really appreciate that little tidbit.
Awesome.
Yeah. And until next time, guys, we'll see you on the next episode.
Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com. Now, at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.